Thank you again for attending another one of my monthly webinars. This time we're talking about managing your cash flow. And I get really excited about this because I think this is really the most important topic in all of your financial life. Cash coming in, cash going out is going to determine the quality of your financial life over and above everything else. So what I like to do, I like to call myself a cash flow financial planner. I like to look at actual cash flows. I don't look at rules of thumb. We're not going to talk about rules of thumb like you should spend X% of your income on your mortgage or anything like that. I think that's ridiculous. Everybody spends their money differently. And the whole idea is to align your spending with your values and to use your money to live the best life for you. So that's what we're focused on here today. My name is Joe Morgan. I'm a CFA and a CFP. I've been doing this in terms of financial planning for 6 years, working with families. Before that, for 25 years, I was managing money institutionally. So a long time in the financial world. I've got an undergraduate degree in finance, a master's in finance. I figured out very early on what I wanted to do with my life, and that's the direction I've gone. What we're talking about here today is not financial advice. Financial advice is specific to you and your situation. I can only give financial advice to my clients because I know them well enough to do so. What we're talking about is just some money moves, some things that you might consider doing that might be appropriate for you and might not. This webinar is about managing your cash flow. You can see there at the bottom, I've done several webinars on different topics. Happy to share those. They are on my YouTube channel, but if you can't find them, just shoot me an email and I'll point you in the right direction. Let's start off, as we always do, talking about how this topic fits into financial planning. What we're trying to do is build your best financial life, and there's 4 areas: protect what you have, know where it goes, make it grow, and retain independence and dignity. We're talking about those 2 columns there that are circled. Know where it goes, that's spending. Retain independence and dignity, that's the lifetime cash flows. That's where we're saying we're not going to live off our kids in our older age. So we're spending today, but we're doing it in the context of how it affects us throughout the rest of our life. And in my process, when I work with clients, I just want to show you how ingrained cash flow is. It shows up 3 times in the initial conversations. Very important. Spending history and a plan, 5-year cash flows, and then lifetime cash flows. We're going to talk about these first 2 mostly today. And again, I should say, if you have any questions or anything, throw them in the chat or the Q&A. I'll get to them afterwards. This is going to be about 20 minutes, and but I'm going to stay on, as long as it takes to answer questions. So let's move forward. So what defines success for you financially? Well, pretty much for everybody, it's I want to do everything I want in life, and when I die, have at least $1 in my bank account, right? Or maybe you have a targeted amount that you want to leave to your kids when you die. That's okay too. But the whole idea of success financially is the ability to do what you want in life and not feel like you're leaving a burden on anybody. And so that, is a simple problem when you think about it at that level. And there's a simple equation that addresses this, and here it is. It's what you have plus what you're going to make minus what you're going to spend. That's the whole equation around financial planning. And this is why I like to go right to the cash flow and spend basically all my time in cash flow, because it's the only thing that matters, right? Money coming in, money going out. Where does that leave us? Did we get to do everything we want to do in life? And so what I'm going to show you today is the process and some of the tools that I use to do that. So here's an overview of what the process looks like. We start here on the left with a spending plan, and I'm going to get into detail about how I do that. This is not a tool, how I do it. This is just an illustration to show you how it works. So we build a spending plan from the bottom up. We take our current lifestyle and we find out what is the price tag of our current lifestyle. We're eventually then going to move on to a 5-year cash flow where we extend that out 5 years. We also look at all our expected income from bonuses, stock awards. We look at our taxes, any extra expenses. That gives us a net cash flow for the next 5 years. Those two things are what we're going to focus on today. But in the financial planning process, we then take that out a step further and go all the way out to your age 100 with that cash flow, money coming in, money going out. And again, we want to end with at least $1 in our bank account. And there's, of course, all kinds of assumptions that go into this. And you might say, gee, how can you do this and make any sense of it? What we're doing is we're getting a direction for our financial life. We're getting an understanding of what we're doing today, how that affects us in later years. What we're not doing is projecting what our PG&E bill will be 30 years from now, right? Of course, we have to make an assumption about that. We have to make an assumption about our expenses, but we know those assumptions are going to be wrong. We're just making the best guess we can today and then projecting it out and seeing if we're on the right track. The second thing that we do with this lifetime cash flow is it allows us to stress test. What if I took a year off work as a sabbatical and came back and I made only 80% of what I make today? How does that really change my lifelong financial position? Well, we've built a model, we just plug it in and do it. Any scenario you could think of, we plug it in. And so we, in that sense, we can do this sensitivity analysis to understand. And so that's really important to be able to do that. But to get there first, we got to start with a spending plan, and then we go to 5-year cash flow. So let's go to the spending plan here. Let me just drag it over. Now, I use a lot of Excel. Probably a lot of you are used to using Excel as well, but here's the deal. You can use a lot of tools out there. I just have never found a tool that works the way I think. So I just built this in Excel. It's very simple. You're going to get a link tomorrow when you get the replay to this webinar where you're going to be able to download a template. It's a very blank template, but it's a template of these two spreadsheets that I'm going to share with you. So here we go. So first off, you have to look at the data, right? We've got to download all of our expenses. I think it's a good idea to look at 12 months because we have a lot of expenses that are annual or twice a year, like property taxes, and we want to capture everything. So what I suggest you do is download all of your expenses and then categorize them. Go into them and give them a category. And you'll see I've got categories here on the left, and I've got months on the right just to digest the data. You don't even have to do that. You can look at just one column of the whole year, and you'll see what you spent on your car payment, what you spent, what you took out in terms of cash, probably not a lot during COVID, what you spent on gas, what you spent on the kids. But you have to do the work of going through the transactions and determining what category do I put this in. Now, here's a little trick. Keep the number of categories small. Make it easy on yourself. Throw a bunch of things into miscellaneous. You can always pull them out later, right? But put the obvious things in the obvious areas: groceries, restaurants, vacation, however you think about it. Now, once you've done that, we've got our expenses for the year. Here, I've only got 5 months here. So I didn't do a full year here, but you can see I've got 5 months and then I've annualized it, right? Just use a simple formula to annualize it. And so now I see that I'm spending about $200,000 a year. Now, don't be scared of that number, whatever your number turns out to be. But realize that's the price tag of your current lifestyle. That's what you're spending, whether you know it or not. And it's better to know it so you can control it. That's what you're spending. Now, the next step is, so we've got we know what our reality was the last 12 months, or in this case, the last 5 months, and we annualized it. Now let's go through and build a plan. Let's go from top to bottom and say, well, last year, well, my car payment is $443 a month. It looks like I missed a month, or probably we just went from early in the month to late in the month. So let's just annualize it. It's about $5,300. And car service, my car is fairly new, let's say, so not a lot of service. I'm going to throw in $500, and so on down the line. You sum this up, and this gives you your planned spending going forward. Now you see my planned spending is higher than my actual spending. Well, that's probably going to happen because in COVID, we probably spent less than we normally do or normally would. That's okay. We just need to know what it is. Once we have this plan figure here, then we have something to compare it to in the months going forward. So we'll update this. You should update this on a monthly basis, maybe on a quarterly basis, but once you get used to doing it, it doesn't take that long. Update it on a regular basis and see how you're doing towards your plan. Now, let me sort of step back a second and say, as a financial planner, I could care less what my clients spend their money on. I don't care if they spend money going out. I don't care if they spend it, on their kids. I don't care where the money goes. I don't care if they spend it gambling, whatever. All I care about is what's the total figure that they spend each year to maintain this current lifestyle. And then we use that to project going forward. So this is where the next spreadsheet comes in. We're going to look at our 5-year cash flows. Pull this over. Oh, let me scroll up. And so here what we've done is we're looking at income and outgo, right? So we've got salaries. These are gross salaries. We've got vesting RSUs or stock awards. Remember, vesting RSUs are taxed as they're vested. And so it's like you got the cash on the date of vesting. Even though you may continue to hold it in stock, you really received it on the date of vesting. So we got vesting RSUs. That gives us total income. Here's that living expense line. From this previous spreadsheet, it's pretty much the only number I'm taking is just this total number and putting it in here and saying, okay, this is our lifestyle. This is what we spend every year. Then we've got total tax. Now here is income tax. This is federal, state, it's Social Security, it's the state disability, all that stuff that comes out of your paycheck. We want to account for all of that. Now for this client, we've got a positive cash flow of about $52,000 a year, but wait, we've got to make 401k contributions. Both spouses are putting money in their 401k. That leaves just $13,000 a year, about $1,000 a month in extra cash. And we've got some extra stuff coming up. Now this is expenses that are not regular living expenses. This is outside the regular living expenses, but we want to account for that too. And we want to think through the next 5 years. Are we going to have to put a new roof on the house? Is something coming up that we know we're going to have to do that's over and above our regular living expenses? Maybe it's a special vacation that you want to go on in this post-COVID era that we're hopefully in. Whatever it is, we want to account for that. And then we're shown what's going to actually happen to our cash over the next 5 years. Well, for this couple, we're going to have a negative cash outflow. We're buying a car, paying cash for it because we don't like debt. That's a personal preference. You can buy a car with debt. Depends on your situation, what the best is for you, but also depends on what makes you feel better. So this couple, they're paying cash. So they're going to be negative cash flow $47,000 next year. Then they're going to be negative $7,000 because they got some extra travel. And then they've got positive cash flow coming here. Now this line down here is super important to understand. And here's why. This is where this cash flow conversation bleeds over into the investment conversation. If I know the next 2 years I've got $54,000 in cash going out the door, should I have that money invested in the markets? No, we shouldn't be taking risk with that. We don't want to take risk with money that we know we're going to spend in the near future. I use 5 years as a good starting point to say anything that's going out the door on a net basis over the next 5 years, I don't want that invested. So that goes into my savings target. Now, what else goes into your savings target? Well, your emergency fund. So think about that. That's separate from this $54,000 because we need an emergency fund and we need this because guess what? What if we buy the new car, write the check for $50K, and then we lose our job the next day? Well, we don't have an emergency fund. You got to have the emergency fund separate from this savings. If you do all of this, understand what your expenses are, what your price tag for your lifestyle is, what your plan is going forward, and update that each month. If you do that, then your spending will adjust to what you truly value. Simply by knowing where your money is going, you will adjust your spending more appropriate for you. And you won't have to do anything drastic or even intentionally to do that. All you have to do is know how much money you're spending. If you're spending, let's see, what have we got here? We've got a plan to spend about $1,500 a month on restaurants and dining out. Well, if you know that last month you spent 2,000 and the previous month you spent 1,800 and the previous month you spent 2,500, and you're considering what to do for dinner, you're going to have to make a value judgment. Should we continue to spend higher than planned? In other words, should we change our plan? Is the plan wrong? Or is it okay to do something else for dinner tonight? Is it okay to pull something out of the fridge and actually cook it, as opposed to spending too much on groceries and maybe throwing away stuff at the end of the week? It will force those value decisions just by knowing where your spending is going. So if you do all of that, you get your plan number, you take a look at your 5-year cash flow plan. Imagine how good it would feel to just to know what these numbers are expected to be the next 5 years. Even though we know they're guesses, and even though we know our guesses are wrong, at least we have some vision into the future. It will give you some comfort. It'll give you the ability to take a breath, step back, and maybe really plan what you want to do with your finances going forward. All right. Where were we on the slide deck? Let's see. Okay. Some very important tips with all of this. Start with your current lifestyle. Really be disciplined and look at what's actually happening. So as you're building that spending plan, you're going to be tempted to say, oh my God, I can't believe we're spending this much on whatever. Let's spend less. You're going to be tempted to do that immediately. Don't do that. Just look at reality, understand it, build your plan off of the reality. If you want to reduce it going forward, that's fine. Reduce it a little bit, but don't make it restrictive. This is where people get in trouble looking at their spending. They come up with that nasty word, a budget that has limits that is by definition too small, because they're coming at it from a place of emotion and saying, I can't believe it costs this much. It shouldn't cost this much. And so then they just artificially reduce it. Don't fall prey to that. Use your reality. Start with your current lifestyle. Add in all probable expenses and income. So think about that word probable and not possible, right? So we're not adding in everything that's possible, but what's probable? What's realistically probable for you this year and the next 5 years? And then most importantly, update it on a regular basis. Go back and look at it. If you're married, talk about it with your spouse. Be on the same page. Even if it's just a couple of minutes a month, it will do wonders for what you're doing and where you're going. So that's the presentation I have today on managing your cash flow. What I would like to ask you to do is tomorrow you're going to get an email. It's going to have some links, the replay, also some resources. You'll be able to download these slides. You'll be able to download the spending plan template, the 5-year cash flow template. Please go forward, fill them out, work on this. And if you're so inclined, schedule time with me. I offer a free financial conversation on any topic to anybody. Everybody gets one free financial conversation. I'd be happy to talk through this topic or any other topic with you. And in fact, I'm going to put in the chat right now the link to schedule that, so you can do it right now if you want. You can see my calendar and just book it anytime you want. Happy to have a conversation about this or anything else. One thing I like to leave with before I go to Q&A, let me give you some time to type in your questions, any questions you have. Here's the deal. There's door number one, then there's door number two in your life. Door number one is you get to afford to do everything you want in life. Door number two is that you miss out on doing things you want in life. You're going to have a financial life. Finances are going to be part of your life. And whether you do everything you want or not depends on a ton of things. Planning will not get you everything you want 100% of the time, but without planning, you're more likely to go through door number two and miss out. With planning, I believe that you're more likely to do more things that are aligned to your values. And that's what we're getting at. It's not that we're going to become rich or spend a lot of money. It's that we're going to use money more appropriately for you in particular and what's important to you. Some resources, I have a podcast, I've got a blog. You can always email me with questions or anything else. Our next webinar will be August 12th, what to do with your old 401k. That was a popular webinar last time we did it, so I'm excited to do that one again. And let me just show you the disclaimer for compliance sake. And again, if you have any questions, just throw them in the chat box. I don't see any questions. I'm going to give it another few seconds, and if there's no questions, then we'll just go ahead and end. So, and if you're ready to go, please feel free to take off. Thanks so much. I appreciate it.